Hello everybody, this video is entitled MSTR plus stretch epic comeback more than they can sell, because yes, yesterday we had an epic comeback in both Bitcoin and therefore strategy actually behaving like it's supposed to, up about 1.5 times what Bitcoin did yesterday. So we had an epic comeback, and I want to call your attention. Of course, we broke 73. We almost hit 74. We actually hit 74, depending on the exchange. What I want to call your attention to, of course, is the fear and greed index is now at 28. Which is a very positive development. We are getting out of that fear, and as you know, is always elevator down, stairs back up, except we seem to be taking the elevator back up in Bitcoin sentiment. It's not the first time we spike back up in the sentiment. Yesterday's sentiment on Bitcoin was a 19. Now it's a 28 in one day. And so what does that tell you? Well, that tells you that price action precedes the market sentiment. It's the price that drives the narrative. If the price is good, people are going to feel great about Bitcoin. If the price is bad, people are going to feel awful about Bitcoin. It's not the other way around. The price drives the narrative, which, kind of leads me to believe that crypto fear and greed folks who follow the space are, not institutions. A lot of the space, I think, is a very youthful investor who's very much driven by chasing and by price action more than it is driven by actual fundamentals and reading the books, at least as represented through the fear and greed index. Let's look at the data, though. So, of course, strategy performing really well yesterday, about in line 1.5 times about that. Saylor actually tweeted about this yesterday, and this pretty much defines the entire strategy. You may remember when Saylor was talking about the refinery, the Bitcoin refinery, creating a Bitcoin refinery. Well, this is the simplest explanation of a Bitcoin refinery. So you have pure Bitcoin, raw Bitcoin, that was up 7% yesterday. And then you have Bitcoin on steroids, and actual intelligent leverage without decay, leverage that is not to mark to market. So we're not talking about a futures 2x ETF like a B2. We're not talking about this here. We're talking about an instrument that's actually designed to maintain leverage over the very long run, and that's MSTR. And of course, MSTR's performance is roughly 1.5 times Bitcoin's performance. And then for those who do not like volatility, who do not like their stock to move very much, who like the movement of money market account, there is stretch, which is low volatility Bitcoin, low vol Bitcoin, and you get a yield that is very high with low volatility thanks to Saylor absorbing the volatility on the MSTR command. This is, in my view, pretty genius, and that's why Saylor has been laser eyes focused on stretch and issuing stretch. Speaking of stretch, I cannot understate the success of stretch for 3 days straight. 3 days straight. Stretch.live is worth follow on X, right? If you have an old laptop, it's worth firing it up and just having stretch.live all day on that old laptop and looking at how successful Stretch is at actually raising funds, how successful the issuance is working. It's really working. Open it up throughout the market day, open it up throughout the day, go on Stretch.live, open it up and see the flows towards strategy. See the flows go towards strategy, minute by minute. It's really great. I want to call your attention, of course, to how much they may have raised. Now, keep in mind, Stretch.live, last week, they had overestimated a little bit. Of course, over time, I'm sure they refine the model. Over time, they will refine their setup. I don't know who coded this, but they will refine it over time. The point is, it's an estimate, right? We estimate over 3 days, over the past 3 days, Saylor bought through Stretch 2,500 Bitcoin. And I want to call your attention to this. Of course, Saylor tweeting, we can buy more than they can sell. But even more importantly, you can buy more than the miners mine, which is a very big deal. You buy more than the miners mine. Remember that there is 450 Bitcoin mined in a day. That's the new issue. 450. Well, what would that be over 3 days? Over 3 days, that would be 1350 new Bitcoin. 1350 new Bitcoin issued over 3 days. We'll look at that. Stretch, bought back, the buyback, the stretch, I'm calling this a buyback, kind of like a company. If a company issues new shares for stock-based comp, they gotta buy them back. Well, we, in the Bitcoin network, there's new shares issued in the Bitcoin network through mining. Saylor created an instrument that essentially buys them all back and then some, because over 3 days, we almost bought 2x, not quite, but we don't know. Maybe we bought them more. We don't know exactly how many Bitcoin we bought, but we nearly 2x'd the issuance of Bitcoin in 3 days. We nearly 2x'd it with what I'm calling the stretch buyback here. So it's a pretty big deal. Saylor alone is offsetting the selling pressure from all of the mining. Saylor alone may actually be offsetting all sorts of selling from all sorts of parties. He will buy your Bitcoin. So, last point, and this is the controversial part of this video, although this stake, I will say, is becoming more and more mainstream. You may have seen at the strategy conference a few days ago, Saylor calling folks who criticize the common ATM people who are short and who have an incentive in this narrative. I entirely agree. I've always called out the people against the common ATM. The common ATM works. The common ATM is accretive. 1.22. You sell a $100 bill for $122. Who wouldn't do that? It's accretive. It's great. I fought that battle for well over a year, trying to educate people on the common ATM and why it works, why you accrete when you issue new shares for more than MNAV. When you issue new shares when your company is overvalued, you gotta issue shares. 1.22 MNAV, technically, is a little bit of an overvalued company, and so he issues the new shares. But what I'm saying is I hope he doesn't just do stretch. I hope he also does common MSTR ATM, because remember that we need a lot of permanent capital to back all of the daily stretch issuance. If we don't raise permanent capital via the common ATM, at some point we won't be able to issue very much stretch. We won't be able to do that because the BTC rating will go ever lower if we just issue stretch without also issuing the common ATM to create the permanent capital to back stretch. So yes, over time, we could stop doing the common ATM and just wait for Bitcoin to rise. And over time, year after year, the delta, right, the difference between stretch 11.5% yield and Bitcoin's expected ARR of 29%, that delta over time will indeed accrue to MSTR. But that takes some time. And if we want to issue a lot of stretch right now, we also need to issue a lot of MSTR stock jointly. They both need to issue. And I let someone, vibe code the math, but the math is such you gotta issue a lot of MSTR common ATM too. I can tell you that. We need the common ATM, especially if we're going for that credit rating, especially if we're going for investment grade credit rating at some point on these preferred and on stretch, especially if we want to foster the demand, we need the common ATM issuance to also go in full steam. And so I hope Saylor is also working on that. And he has, in February he has, and that was a good thing. And I hope it continues, because if you issue a lot of permanent capital with MSTR common shares issuance, and say you don't issue stretch, you're increasing the BTC rating. BTC rating of 4.9 is very good, but it needs to stay that way. And so anyways, hopefully that kind of gives you my stance, and I'm just sharing my happiness about these developments today for this talk. It's just amazing. So anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful day.